meeting. So let's get started with our interest rates. So according to your Freddie Mac here, your 30-year fixed conventional average was 6.6, and you can see your 52-week average is 6.09, and it's going all the way up to 7.79. That is the range that we saw. So the interest rates are coming down, but not as much as we would like them. Last week, it was coming down a bit, but it went back up. And let's take a look at it according to our Mortgage News Daily, right? Hey, good morning, Rupinder. So for your Mortgage News Daily, your 30-year fix was showing 6.92. So you guys can see that it went up around 5 basis points from the day prior to this, right? So is it still better than 8%? Definitely, but we want to see this even lower, hopefully this month or next month, because there's a lot of buyers that are simply waiting for you guys as realtors to show them properties, but they were just scared when they were 7.5%, 8%, right? Where they want to see these a lot lower. But right now, last week, as we mentioned, they were coming down, but then they start jumping back up. And your FHA, they were around 6.20. That's your national average. And when you look at these numbers here, these are your top tier scenarios, right? What does that mean? That means that the credit score is really good, right? This person has FICO of 780 or above. So if you have a cosigner and the other person has, credit scores of 600, you're not going to get this interest rate, right? Or if you're putting down 3% down payment versus someone putting down 20% down payment, person who's putting down 20% down payment will get better interest rate on there too. Another one is that if it's going to be your primary residence or not, if you're going to live there or not, that will make a difference. If you will live there, you'll get better interest rates. So there's a lot of factors that go into interest rates. So just don't look at the headlines and assume that you will get those interest rates. Okay. Next is that your buying power. Your buying power increases. We show you every week with different examples. If the loan amount is $600,000 here and today's market is 6.92 versus your 7.67, right? So we're comparing it 6.92 to 7.67. This person with today's interest rates can afford a loan up to $600,000 versus 557 at this higher interest rate. And these are not made up numbers. These are numbers that we have seen in last couple of months. The affordability is getting better, the buying power is getting better because the interest rates are dropping. So you as a real estate agent should be focusing on your client and say, hey, let me be that communicator. Let me be that guy to my clients and tell them, hey, the interest rates are dropping. Maybe you have a pre-approval that's been, a couple of months old. Go back to your loan officer and see what is your affordability as of today. Okay, so you have a good idea. Now we're going to give you 3 different examples here. If someone is making $60,000 versus $90,000 versus $120,000. So you guys have a good understanding, hey, what type of income that is needed, what type of down payment is needed to afford a property in New York, right? So if someone is making $60,000, maybe they're just starting their life and, they don't have much down payment either, maybe $50,000 to start off with, but they are taking care of their monthly debt. If the monthly debt is around $150, that's a beautiful, good thing for them because they can manage that. And we'll use today's average of 6.92 here. Your property taxes are $5,000, just an example, and your property insurance $1,500 for the whole year. And DTI that we're using, your debt to income ratio is 45%. Okay? So 45% ratio here, this person can qualify $286,000 property. So if this person is coming up to you and having these kind of specs, just know that maybe they're a good candidate for a condo or a co-op, but they won't be a great candidate to purchase a $500,000 property because they simply don't qualify in today's market, right? So maybe this person can have a cosigner added or have their income increase from $60,000 to $90,000. Hey, we have a $30,000 increase, right? So now they have, instead of $50,000, they have maybe another $10,000 for their down payment. So when that is the case, everything else stays the same. The same person now, or this household, can afford $466,000 property. They won't get a mansion in Queens here for sure for $466, but at the same time, they can get, they're on the right path. They were able to afford 286, now they are 466. And now their goal should be to increase their income, and let's say they go up to $120,000. And this might take them a couple of years to get to. So they have $120,000 income, they have $70,000 in their down payment now, and everything else stays the same. They can qualify for $647,000, right? This is where your client is ready for you to show them properties. This is when they're ready to go under contract. This is where you want to focus on. So if someone tells you, hey, I'm making $60,000, here's my income, you're not a loan officer. So you want to give that lead to the loan officer and see how much they qualify. But you need to have some sort of understanding that, hey, maybe it's your own journey. Maybe you're making 60 and it's going to be 90 and 120, and how much can you afford? This right here, DTI, your debt to income ratio, matters a lot. You want to keep that as low as possible so you're not burdened with, hey, making that mortgage payment. Majority of your paycheck doesn't go towards your mortgage payment. Okay, so keep this as low as possible and see how much you qualify for. The inflation in general is at 3.35 as of the last reading, right? We will wait for the next reading, but as long as it stays below below this 3.3 for the next meeting, hopefully the Fed will start cutting rates, right? That is the $1,000,000 question, when they will start doing that. Hopefully they will do it in March, right? That is the first meeting that we are thinking that they will actually do the cut. We're not expecting them to do it in January. If they do the cuts, you will see the interest rate drop in the following week or so, and then you should definitely be ready with your clients, because when that time comes, you're going to have your clients asking you to show them properties instead of you just following up with them. Okay. Couple of things in the news here. Home buyers demand pushes mortgage application higher even as interest rates inches up. We know that interest rates are not going crazy high or crazy low. They're around 6.9 for past couple of weeks now, right? Your credit card debt is up. That's a negative sign. We just mentioned that, your monthly obligation play a huge role in your affordability. So if you have a lot of credit cards, you won't be able to get the mortgage that you want, right? So you need to start working on your credit card debt. Right now in America, credit card debt is up and it's taking longer to pay down. Why is that? Because you have more expenses coming every month and it's hard to pay those current balances that you have, right? So you just make sure that you are taking care of your credit cards and you're paying down those not just the minimum payments. Look at your statement. If it says, hey, just make $50 minimum payments, us as loan officers, we're looking at that minimum payment which you have to make. But if you just pay that minimum payment, it will take you years and years just to pay that balance off, and you will pay a huge amount of interest on the money that you borrowed. Let's say you bought something for groceries for $500 or something, you're going to end up paying that back in $700 or $800 if you're just doing your minimum payments. So work on your credit card debt and make sure that you can reduce it much as possible. One way of doing this is to start off with the lowest balance. Let's say you have 3 credit cards, start off with the lowest balance, try to pay that off first, and then move on to the next one. Okay? When a loan officer tells you, hey, I can offer you 5% interest rate today, right? We just showed you the national average. So you need to question that, hey, or if your client tells you, hey, I just got this, interest rate of 4-5% and everything, you have to question it. How is that possible? Did you do a buy down? So you guys can see this article here that rate buy downs might not have benefits for the borrower. Why is that? Maybe you want to save maybe $50 and pay $4,000 to buy down the interest rate. But how long is it going to take you to get that money back, and when you're going to start benefiting from that buy down? By then, maybe you also going to refi, right? So if your loan officer is telling you, hey, I can offer you this interest rate, figure that out. Why is that? Okay. Couple of other headlines here, guys. Mortgage rates back up to the highest levels for more than a month. We have seen it. They were coming down and then they start going back up. Mortgage rates finally expected to dip below 6%. When we say below 6%, that will be a really positive news for us as a housing market realtors, because there will be a lot more buyers qualifying for the same properties. but overall the affordability is still low. Why? Because people just want to get, let's say someone's looking for $100,000 property, and when they do go to the loan officer, they say, hey, no, you only qualify for $600,000. So that $100,000 is that's holding them back, right? But if these interest rates do drop, or when they do drop, you will see those home buyers are coming to you. Okay. There are different markets, so every market will have different insights there, but these are the top 5 cities where highest barriers. So it's hard to be a home owner in these 5 cities, and you can see we're New Yorkers, so we see them as number 3 here. So even the top ones, LA, right, it takes you 15 years for an average family to save enough funds to qualify for a conventional loan, right? So number one is that some of these people thinking that I need 20% down payment, right? So when you're talking to your realtor, or as a realtor, you're talking to your clients, just make sure that you know the concept. You can go with the FHA loan or you can go with the conventional loan, but you don't need 20% down payment. It should not take you years and years and years just to save up that 20%, right? Rather, go with the program that will allow you to put down maybe 5 or 10% down payment, and you can move into that property. Okay, just that, there's a lot of buyers, they just don't know, or they don't have enough knowledge about the mortgage side. So you as a realtor, you don't need to know every guidelines, but just know in a nutshell that, hey, you don't need 20% down payment. Okay. Here's some stats from our NAR, National Association of Realtors here. This is comparing 2022 to 2023 for December here. Your first time buyers, right? Let me just allow him in. Okay. This is your first time buyers, right? That they dropped in 2023. This rate went from 31 to 29. Why is that? Higher interest rates, limited inventory, right? Those two were the biggest factors. But how about focusing on the investors as well, right? You might see some clients that it's all cash, but you have to bring value to them. You have to show them properties that where they can do the flip and make some money, right? So you guys can see that was steady for the investors. And how about cash sales? We just mentioned that these people don't need mortgages. They already have money in the bank. You might look at a person and think that, hey, this person is homeless and might have $1 million in their account, right? So just don't judge anyone. But with your clients, when they tell you, hey, I have all cash, all we need is proof of funds. We don't need a pre-approval letter. They're not going with the bank. We just need their proof of funds. So let's say they have 3 different bank accounts. Each of them have $100,000 each. Now you have $300,000 total for this investor. Okay. So you guys can see that I want you to focus on the first-time home buyers that were not ready in 2023 because of low inventory and high interest rates, and see if you can be that guidance for them. Okay. And let's be honest with ourselves now, right? This is for you guys. This is not for you to answer to anyone else. These answers should be for yourself. Hey, how many hours are you actually putting into real estate? So the stats came out for 2023 here for the realtors, according to NAR here, that all realtors, only 19% spend less than 20 hours a week, right? About 40%, 39% of them spend between 20 to 39 hours. And you can see 34% spend 40 to 60 hours a week. And then you have the really, the top producers where they're spending more than 60 hours. And that's your 8%. So where I want you guys to be at, especially the newcomers, is to at least be in the second or the third category, where you're spending at least 20 to 40 hours, right? That's a lot of hours when we're talking about putting into real estate. That is looking for properties, right? Seeing what's on the market and showings and showings and showings. If it takes you half an hour to get to that place and another half an hour, count that as 1 hour. Great. You spend 1 hour just traveling on that. And then you took you another half an hour to show the whole property. You spend hour and a half just on, one client, 2.5 hours just on one client, right? You're doing 2 or 3 showings. So you can add those hours, but just be true to yourself. Hey, how many hours am I actually putting in? If you're the listing agent, You're hosting open houses for 3 hours, 2 hours, an hour. You're doing it, multiple times a week. Add those hours. Hey, how many hours am I really putting into this listing here? Right? The sellers are looking because they're eager to get their offers accepted and they want to move on. They don't want it, like, especially the property that are vacant, right? They have a burden of their current mortgage. That property is not producing anything, but at the end of the day, it's having a negative effect, right? They have to pay the mortgage. They have other, wherever they're living right now, they have to pay that mortgage. So they have two mortgages to worry about. They want that property to go under contract as soon as possible. So I really want you to put yourself in their shoes and say, hey, I need this property under contract. What will it take me to do that? Right? It's going to be a lot of struggle, a lot of hustle, a lot of grind into that. So all these hours will matter. So if you put these 40 and 40 here, that's over, 80% of these people, realtors overall, are spending between 20 to 60 hours, right? That's a lot of hours. So just please, if you're doing less than 20, don't expect to make a lot of money in real estate because you're not spending enough hours there. Okay. And if you are spending some money, I mean, some time on this, maybe you're spending 20 hours, how much you should expect to make that, in return? Your goal should be to make $50,000 a year from your real estate license, right? That is at least. So you can look at the stats here. According to NAR here, median gross income for realtor, they earned around $56,000 in 2022, and in 2021 it was $54,000. Again, your goal should be 50K. Hey, I need to make 50K at least from this license. How am I going to do this? Is going to be by working with your clients, putting in a lot of hours, know what's on the market. Okay, so you have to ask yourself, how many hours am I putting in? How many hours did I put in last week and the week prior to that? How many hours should I put in for next week? Plan that out. Have a planner with yourself. I use a sheet like this here, guys, that helps me plan out the whole day for myself. But you can just make a list. Hey, this is what I have to show. This is how many hours it will take me to do this, and start organizing yourself, right? How many clients do you have in KV Core? You should know that. Hey, I have 5, I have 10, I have 100, I have 200. God knows how many leads or where those leads are coming from, right? You want to keep adding them to KV Core, and not just add them. Make sure that the alerts are set up and you're actually showing them, right? You're showing them properties. How many properties or how many showings did you have last week? You have to ask yourself that. Hey, I had 0 showings last week. How could I do my first showing this week? I have to contact all these 10 to 20 people. Hopefully one of them will say, hey, Pramod or Tracy or Julian or Janet, show me this property, right? So this is where you want to be at by doing you have one job. As a real estate agent, you literally have one job. That job is to take your client to the contract. And how are you going to take them to the contract? By showing, and showing, right? So there are some clients that they will, give up on you, or you give up on them after the 10th showing or the 50th showing, right? Those are a lot of showings. That's a lot of hours put together and everything. Your client is looking at you, right? So you have to make sure that you are part of those showings. Once you have the contract is the property is under contract, you have other people that's helping the buyer out. You're not needed at that time after the property is under contract. Why? Because your buyer's attorney, they have their duty. Now that client of yours, right, your buyer, is that attorney's client as well. And now his attorney's job is to make sure that, hey, the property is, everything that's supposed to be protecting your client is their client as well. So they're protecting them. So you don't have to worry about that. The loan officer is taking that file all the way up to clear to close, right? The loan officer might have 5 or 10 or 20 different things as conditions. Hey, I need this, I need that, I need this to satisfy these underwriters. So guess what? Your client, that was doing all those showings, is now your loan officer's client too, right? Now the loan officer is hungry as much as you are to take that file to clear to close. Then also your buyer's attorney hired a title company to make sure that there's no violations, there's no open permits, there's no any wrong with that property. Everything is a clear title, meaning after your client, which is your buyer, actually buys that property, nobody will knock on their door and say there's a problem. So you have, your job is to take them to under contract. Very, very hard for you to do, right? Because you have to show them so many properties. You have to send them hundreds of properties as text messages. Out of those, maybe they'll pick out 10 or 20 of them, and then you go from there. With the limited inventory, we know those numbers are a lot less, right? But just make sure you understand your job. You have your license. Hey, I need you to I need you to be under contract. How am I going to do that? If you need my help on any end, guys, with the showings, with the questions, hey, how do I get started? Please ask. I would not know out of 70 agents which agent needs help or which one does not. Please ask, right? But your buyer's attorney, your buyer's loan officer, your buyer's title company, they all have the same goal to close that deal. So you can rest assured that they will take that file to the closing. But when do you come in? Remember, you're going to do the final walkthrough. You're going to come back into the deal right at the last minute again. One is going to be that they're giving you you're going to go through a final walkthrough, make sure everything is good, and then they're going to go to the closing table. So don't think that, hey, after contract, you're gone. But after going under contract, that 30 days, that 45 days, you should be just following it with the buyer's attorney. Hey, how's the file moving? You should be the boss of this file because you're the one who took this file to the contract. You, the one who showed, you can always tell, even at the closing table, hey, Mr. Smith, do you know how many showings that we have to do? How many, there was so many things that went wrong with that showing, that showing. All those stories, you can come up with those at the closing table. Okay? A lot of our agents there say, hey, at the closing table, I don't need to go there. No, man, you're the reason that they were under contract. You're the one who found that property. So don't undervalue yourself as realtors. You guys are the top gun when it comes to that deal. Everybody else came later on. Okay? So please understand your job and make sure that we're working towards going under contract. How about the inventory? Right? We have inventory, right? If we don't have inventory, we can't sell anything. You're not selling your own properties or anything like that, so you have to make sure that you're looking at MLS on daily basis. And very simple, straightforward is your KV Core. KV Core is one of those systems where you can just log in and within seconds see what's coming up in the market, right? How are you going to do this? KV Core listings, all MLS listings. You can filter this by your area that you prefer and all that. But if you don't do anything, just look at the top 2 or 3 pages. You have a good idea, hey, what's coming on the market, what's coming soon, what just came today, and which one I want to send those property to my clients, right? We are competing with other realtors and we're competing with Zillow and other apps. Okay, so the competition is on the highest level and it's going to get worse when we see these interest rates drop. So prepare yourself, know your inventory. If you have the knowledge, your clients will put some respect on your name because you have that knowledge of inventory. If you have no idea, if your client is telling you, hey, there's a new property in South Ozone Park and you have no idea, we got a problem. Okay, so please that you are aware of new inventory on daily basis. It literally takes you few minutes just to see what's on the market. Okay, so when we are setting up these alerts in KV Core, right, why are we putting a price range? If someone tells you, hey, I'm looking for $1 million property, why do we put $50,000 less or $50,000 more? Right, there's a reason for this. So we can find them properties that needs renovations, but you don't want to miss out on those, and even those properties that are fully renovated. Your client might not say, hey, I want to go with $650,000 property. My budget is $600,000. But if they view the property and maybe you can get it for $630 for them, they might move forward with that. Okay, so don't assume that they will not go with the upgraded one or remodeled one, right? Recently renovated, or a beat up property that needs renovation. It could be on either end. Show them that's going to be in their price range. So purchasing a home in need of remodeling with either cosmetics or structural reasons, it can be a win-win situation. 56% of these buyers are saying it would be a fixer-upper, right? They would buy a fixer-upper. Why? Because they can it's in, affordability. They're getting a better deal. They're not paying the premium price, and they can personalize it. Right? That's the biggest thing. Who doesn't want to upgrade their kitchen or their bedroom or office room or whatnot? Right? They want to personalize it in their own way. So find them a property that needs work and tell them, hey, we can buy this below market. This is you're looking. Your range was 600,000. I'm finding you a property that's 550. You could spend that $50,000 and personalize it and upgrade it to your liking. Right? So you as a realtor needs to give them options. So here's a homeowner story, guys. Maybe you guys can relate to this. This is from 2020 and going into 2022. So the guy name was Tyler. He was a home buyer, and him and his wife started their journey in 2020. Right? This is when COVID hit. They were not too lucky. Why? The interest rate was super low. Right? They were looking for months, about 10 months, and they had no luck. They went to open houses, and open houses had crazy lines. We all went through that. And guess what? They got tired of it. And this is a lot of these home buyers went through this journey. They started in 2020 and then they stopped in 2021 because they were like, oh my God, I'm going to all these open houses. I'm putting $50,000 over asking price. I still can't get this deal. What is the problem I'm having? It was just too much competition. That whole same thing that we're talking about, it can come back when we have these interest rates drop. So you as a realtor, just make sure you're telling these clients that, hey, you will miss out on these opportunities if you don't take action now. Right? The couple, they resumed their house hunting in December of 2022 with a new realtor. Why do you think they went with a new real estate agent? Maybe they were not happy with the first one. Maybe after that, they dropped them in 2021. Maybe they couldn't get in touch with him. Maybe that person didn't get in touch with them either, right? So you as a realtor, just here's a learning lesson here is that don't give up on your client. They might be tired of off of 10, 20 showings and everything like that and say, hey, I just want to wait. Maybe the interest rates drop even further. They're going to be in more competition, guys, right? So how about with Taylor and them? Tyler and them, their family, even when the interest rates were high, the home prices were still continue to rise. They ended up placing an offer below asking price because the interest rates were high, right? There was less competition and they got their deal. So they don't think that they will be able to afford the same property 2 years ago, right? Why? Because of their bidding wars. People were asking, $500,000. They got offers 550. So when we see interest rates right now at 6.92 as national average, you should be telling your clients, hey, when they come below 5%, you will have more competition for the same property. And remind them that, hey, it might not come down to 3% interest rate, but even if they're at 5, we're going to see a lot more buyers competing for the same property. Okay? All right, guys. Any questions, concerns, anything we mentioned so far? All right, guys. Next is that I really want you guys to focus on City Febs. City Febs is a program that helps renters, right? These are your tenants that with the payment, right? This is a helping hand from New York City. So I want you guys to be part of these deals so you can represent the landlord. Hey, what are the benefits for you to rent out using, a New York System program? The biggest benefit that they have is on-time payment. The landlord is getting paid from the city, right? And do not assume that these people need assistance. These are bad people. They're not. Okay, because we live in New York City, the taxes are crazy. So there are some assistance programs to help out those people who are in need. So look, we're going to show you how much money you guys can make as realtors as well. But these maximum rent amounts, this got updated recently. So they're even paying higher rent that includes utilities. There are some landlords that will not include these utilities. So you guys can see the amounts here. So the first line here, you see the family size. How big is the family? Is it one person? Is it two people, three people, 4, 5, and all that? This is your family size. The next one is going to be your bedrooms. How many bedrooms that you have? So let's say you are a family of 3 and you have 2 bedrooms. You can get paid from the city. Maximum they will pay to your landlord is $3,000, $3,027. If they're not including any utilities, they can pay them $2,762, right? So this is for 2 bedrooms. So no landlord will say with the amount, hey, I need less, more or less, because that amount is just, right? So if the landlord is getting paid, how about you as a real estate agent, as landlord's agent? Because you're representing the landlord, you can get paid 15% of the annual rent. So we're gonna assume that the rent is $3,000 per month, and you're gonna multiply that by 12 months, and then you have your $36,000 per year. So you need 15% of that. So when you calculate 15% of $36,000, you get $5,400. That's a huge, good amount of chunk for as a rental transaction. This is more than a co-op or a condo deal. So I highly recommend that you guys focus on your rental side. Read up on it, right? Check, Google it, ChatGPT, your YouTube. All these websites will help you better understand the programs and the guidelines and all that. If you want to, work with me one-on-one and get better understanding, we can go through that too. But the rental size, please do not say no to rentals. If someone calls you, you are a real estate agent, you're supposed to accept all the programs that's available by your city and state. We cannot discriminate, we cannot say no to anyone. We want to be that helping hand. And guess what? You guys are getting paid when you're becoming that helping hand. So become expert in these fields so you guys can make some money out of this. Okay? Any questions on rentals, guys?
Lucky,
Yes.
who pays the broker fee in City Fed?
City does.
Okay.
Right? That's a good question. Yes. Yeah. All right, guys.
So you
Any
said a city fat?
city fabs? Yeah.
All right.
Right?
I could just Google that.
Yeah. You're gonna Google it. Check up on your own first. Call me after that and say, hey, Lucky, I have these questions, and we'll go through them in detail.
Okay, no problem.
All right. Yeah. All right, guys. The next last meeting, Brian, he mentioned ADU. That's your accessory dwelling unit. So I did some research for you guys. It's not available everywhere, but I just want, because if someone else mentions that, as real estate agents, we should have a good concept, understanding of the concept of this, right? So it is a New York City program. They're allowing, it's called Plus One ADU program. It's a partnership with Restored Homes. So basically, it will finance and provide additional unit. It could be in the backyard. It could be, they're doing a inner, upper level unit. You can see a top here, or garage conversion. You can see it on the side here, or detached unit. You can see it here, or interior lower unit, which is the basement up here. Right. So they are allowing in some way or form and everything. I want you to be, again, know who's eligible, if the building is eligible or not. I will share these with you guys, and I want you to take this information and scan this code, and you guys can see the full details. We just don't have enough time to go over this, but it's very limited program. So the main thing is that it is a program that is open right now, so I just want you guys to be aware of this. Okay. Next is that one of our agents mentioned Vendy contract, right? So again, if these terms are coming up, I just want you guys to be aware of these. So a Vendy contract is also known as a land contract or contract for deed. So basically, instead of getting finance right through a bank or going through a lender, the buyer is going to be working with the seller. So the seller now, he's the vendor. He's going to agree to finance the purchase of the property directly with the buyer. So the seller is saying that, hey, instead of you getting a loan from this bank, you're going to pay me and pay this mortgage off, rather than buying it or obtaining a finance through a traditional mortgage lender. Okay, so just make sure that these clients, if they mention anything with Vendy contract, you guys know that there's going to be seller financed. That's the simply put. It's going to be a seller financed. Okay, but the title now, you're not gonna be an owner right away, right? So the title transfer is gonna be fulfilled once the contract terms are fulfilled, which means that you gotta make all your payments and then your title is transferred. I never recommend this option, but because it's a concept, you guys should know what is a Vendy contract, and it's gonna be a seller is gonna only transfer the title once he gets paid. It could be a cash deal, maybe 50% upfront and 50% finance. So just know that Vendy contract, it is an option. Yeah. All right, guys. Next, we have our couple of MLS rules here. Again, one of our agents was dealing, we were having a conversation with him. So I want you guys to be on the same page. If a seller tells you, hey, this is an open listing, we cannot put it on MLS, right? What is an open listing? It's open to all the agents. The seller is basically telling you, Janet, that, hey, if you find me a buyer, great. I'll work with you. I'll pay you 1%. I'll pay you 2%. But hey, Shakira, if you find me a buyer first before Janet, I'll give it to you. I don't have to pay Janet anything. I'll just pay the person who brings me the highest and the best offer, right? That's your open listing. But it's going to be the race to find that buyer, right? But just the rule is that you cannot put it on MLS as exclusive. That will be a violation. Okay. And how about we go through this a lot, right? You put in an offer and your client tells you, hey, what's the update on the offer? Right? I did not hear back. And you're telling them, hey, the listing agent is not responding to me. I put in the offer. How could I be assured that, the seller actually saw my offer, right? Or did this buyer's agent just simply ignored it, right? The reason I'm bringing this up is that we had a contract, a property that our client was, our agent was showing. He put in an offer, and the listing agent kept saying that, hey, I'll get back to you, I'll get back to you, and then all of a sudden, a couple of days later, say, hey, no, I apologize, we're under contract. Say, okay, fine, they're under contract. Let's look at MLS now. Who did they go with, under contract with? Was it another agent, or was it the same listing agent? Rest assured, it was the listing agent. It was 3% commission. So, our agent was really upset. So how could you be assuring your client and yourself, hey, did the seller actually see my offer or not? It's called, you can verify that through a form called offer acknowledgement form, right? Where you're going to find that is going to be in your transaction desk. And there's a piece on the bottom which the listing agent and the seller agent is involved in, right? So it says in this form, in signing this form, the sellers are not accepting or rejecting the offer. They're simply saying that they actually saw it, right? They saw the offer. That's what you want to make sure of. So they print out the seller's name, the listing agent's name, and then the seller signs it. Then this should come back to you, right? The next question I get is that, hey, how could I rest assured that actually the seller is signing this? I would not know that, right? But the listing agent is supposed to contact the seller, and the seller is supposed to sign this, acknowledging it, hey, I got your offer. This is the main reason when you see cash offer deals on MLS and it says, hey, put in your offer using this portal or using this link. I prefer those better than just putting in an offer and emailing it to the listing agent. This way I know that, hey, using this portal, the offer is going to the bank and one of those representatives is going to look at it. A copy may go to the listing agent, but I could care less. I just want to make sure that the seller sees my offer and the seller either accepts it or rejects it, right? After doing all that hard work, it's taking you guys, a long time, all of us, to, go under contract with that one particular client. And when that does happen, you're putting in the offer and, complete silence, that's going to be a problem. Okay. So at least take it one step further, have your listing agent fill out this form. Okay. Commission, guys. Just make sure you are protected. Don't assume that it is properties listed on MLS that you will get commission from that. Some of these listing agents are getting very tricky, especially when you're even calling them. So the best way to do this, I send you an offer sheet. I'm sending you a co-brokerage agreement. I'm sending you an offer for $500,000 and it says 2%. I'm expecting $10,000 commission. So here's my offer sheet. Here's my co-brokerage agreement. Please sign this so you have a copy of that. Again, if you're brand new, you're doing this first time, I expect you to do it with your team leader or you do it with me here in person if you're not part of a team. But we want to get it right and we don't want you to lose out on your commission. Okay. Next, guys, this is a nice property coming on auction on 26th. Some of you guys are showing a lot of interest in auction properties. This is in West Hempstead. The reason I like this property is because the lien amount. The lien amount is $371. So we know that it will sell for a lot more, but at least the bidding is going to start at 371. It's going to be on the market on 26th at 2 p.m. in Nassau Supreme Court. Again, if you never went there, please just go there and see if it actually comes on the market. If you're already started going there, now maybe it's the time to call your investors and say, hey, I have a new property that's coming on the market. Do you want to come with me and let's see if we can get this property? If you guys want more details on this, please get in touch with me so we can go over this process. Okay, but it's a nice property coming in West Hempstead. So when you are having a conversation with your clients, right, just know that, hey, you already took them to the contract. You don't want the deals to fall through, right? If it falls through, we mentioned that, hey, you got to start from square one. So make sure you just having these conversation. The loan officer might have these conversation, or they should have this conversation when the application is going in. But you, as a real estate agent, might should have an idea. Hey, just make sure you don't apply for any new credit cards. Hey, make sure you don't buy a new car. You're getting this new nice property. Please don't go buy a Tesla that's going to be $60,000, $70,000 and really jeopardize your application. Please do not switch your banks. This is not the time to do any type of switching. If you're working with Chase or TD Bank or Citibank, stick with them. We need their bank statements and all that. It'll be a red flag that if you're switching banks, what's the reason that you're doing this? And do not make any unusually large bank deposits. If your income is $5,000 and the loan officer sees a $6,000 or $7,000 deposit, they're gonna question that. You might have to come up with gift letters or whatnot, but just make sure you're not making any large deposits. Okay? And the last thing is that you do not go behind on your bills. It'll be a red flag again because these lenders will be doing a credit check before the closing, and so they want to make sure that you're not behind on any type of credit cards, mortgages, or any of that. Shakira said, what was the name of that form that we mentioned earlier? It's called offer acknowledgement form. Okay. All right, guys. So these are the things that your client should be following when they're already gone under contract. Okay. Next, guys, I want to talk about one loan program that might help your clients. It's called Home Ready. Another one is called Home Possible. Both of them are conventional loans. And look at the down payment, 3%. Like, who doesn't want to go with a conventional loan and it has 3%? Your FHA has 3.5%. So why don't you want to go with 3% Home Ready program? So let's go through the guidelines. One is your credit score. Let's say if your credit score was 580, you simply don't qualify for this, and then you do qualify for FHA, right? But if your credit scores are 620 or above, you qualify. Your income, that matters a lot. In order for you to qualify for this type of loan, your income needs to be below 80% of your Avia medium income, right? So right now in Queens here, it's $139,000, right? So 80% of that, I believe, is going to be around $90,000. So Josh, you know the actual number on this, 80% who qualifies for this? Yeah, around 90,000 or below. If they're making that, they should be able to qualify for this mortgage. But the good thing about this type of loan is that even though you're only putting down 3% down payment, your mortgage insurance, since it's a conventional loan, does get removed after you hit 20% equity. Yeah, Josh?
No.
Oh, good. Okay, yeah. So because this is a program by Freddie Mac and Fannie Mae, they do require that you take a mandatory home ownership education program. Basically, it teaches you everything about home ownership and all the requirements and all the responsibility that comes with your home ownership. It can be your primary or it can be an investment property, right? So all things are good in here. So if you have a client and say, hey, I might want to go with FHA, if they come to us and we see the income, we offer them all the programs, and one of them will be your Home Ready. So if you have a client and that's interested, you can tell them, hey, there's a program where you can put down as low as 3% for your conventional loan. Okay. All right, guys, we have about 10
I,
minutes left here. Yes. Yeah, Janet?
I unlucky. The question is like I have a client who doesn't have too much money to put the down payment like 10% or 20%. So these home good or home ready programs, in
Mm-hmm.
order for her to qualify for one of those, what what the requirement that she needs to meet.
So the income, what is her income? Simply put, if it's less than $100,000,
Income is like 70.
good. So she qualifies. How about credit
Okay.
scores? Is it more than 620?
That's very good. 750.
Perfect. Yeah. So just those two things put together, as long as she's willing to take a small course for home ownership, and she qualifies, she can put down as low as 3%. So she has 3% down
Oh,
payment.
great.
She has another 3 to 5% closing cost. So let's say we will go with the highest one, 5 and 3. So that's 8%. As long as she has enough for around 8% in her bank account, her credit scores you say is good, and she's making around 70. We now the next problem is how much she actually qualifies for, right? She won't be able to buy a mansion with that type of income, but she should be able
No,
to
no.
buy a single family that needs some renovations,
Yeah, yeah.
right?
That's what she. Yep.
That's perfect. Yeah. So maybe have your client come in and we can give her that option. Okay.
Yeah,
Sounds
definitely
good.
do that.
Yes. Thank you so much. All right.
Another,
Lucky, can I ask a
I
question
Of
don't
real
course.
have
quick?
it for time.
I'm sorry.
Sorry. I said, I don't know if I should talk to you in person, or I can just ask you the question quickly.
Sure. Sure.
The question is, I have another client. He wants to buy a $2 million multi-unit house, like 4 to 6.
Okay.
How do I find that multi-unit house?
One, it would be I would check LoopNet because it might be commercial, but on MLS as well. So maybe you can set up a meeting with me. I can set up these alerts for you and actually review it with you, and
Yeah.
see how we're gonna guide them. Okay.
All right, so I'll make an appointment with you. Thank you
So,
so much.
you're welcome. Yes, Clarence. Sorry about that.
No, I just wanted to ask, right?
Hmm.
Remember before we had discussed the issue about the lawsuit with the commission, but I've been noticing that on the MLS, things still remain about the same in a sense. They're not saying anything about the buyers have to come out of their pocket to pay the commission. It's still coming from the seller. Nobody's making any switch. Is that just for some people?
Yeah, very rare cases. Right now, I see about 10%, maybe 5 to 10% listings that would have 0 0 for buyer's agent and everything. But still, if you're the listing agent, if I'm the listing agent, the conversation I'm having with the seller is that, hey, whatever you're paying me, I'm gonna pay half of my commission to that, and that is negotiable, right? And I can sell the property a lot quicker when I'm offering a commission to the buyer's agent. The interest rates are already high. It's really hard for the buyers to come up with additional for their agent, so it's going to be hard to sell this property. If you want to sell it quickly, offer something that's, we can negotiate, and I'll split that with the buyer's agent. That's what still majority of these listing agents are doing, especially the experienced ones, right? But very rare cases where they will say, hey, just pay me this much, but I won't pay it to the buyer's agent. But the reason you're not seeing a lot of those changes yet too is that initial lawsuit that is being appealed, right? So that we will see the outcome of that. But there's, I believe, 3 or 4 new states, including California, has new cases that have been filed. So probably the whole 2024 will go through this. So this, if there's a one major change that's going to come, it's going to affect all the realtors. It's going to be concrete, and it might take a few years. But the point of this was that you guys don't assume that you will get paid from these MLS listings, right? But you still might take some time, right, Sclaren?
Okay, because when I speak with a couple of sellers, they had no knowledge of things of that nature at all.
Yeah,
And
because it
I
was not
and
mainstream. Yeah, right. Because they
okay,
don't. Yeah, it's perfectly fine. I mean, like I said, when you were the listing agent, you want to go the old way, right? Just want to make sure, because you're not lying to the seller, right? You're telling them, hey, this is the commission I'm charging you. Let's say, just to give you an example, I'm charging you 4%, 2% is coming to me, and 2% is going to the buyer's agent. If I happen to be the buyer's agent, I can either negotiate it to 3% or leave it at 4%. It's all part of negotiation. But you're right, not every seller knows about these lawsuits and all that, and we don't need to advertise that until we are concrete as well, right?
that sounds good.
All right. Yep. All right. Thanks for your input, guys. We got a few minutes left here, guys. All these listings that we have on the market from our office, I want you guys to be supporting each other. At least go look at these properties. Sometimes you look at these photos and you might say, hey, I don't have any buyer. But when you go in there, you never know what's going to take and say, hey, this might be good for this client or that client, right? But please take, we mentioned putting in a lot of hours and everything. This could be few hours on that too, on weekly basis. Hey, there's an open house that, I'm hosting. I want to let my loan officers know, at least let the office know upfront so we can tell our loan officers to meet you guys there, right? Even if it's for an hour or so. I want both the companies to support each other so, we can close faster. That's the whole point of this. Okay. The term to learn today, guys, is going to be LTV, right? When you see that, that means it's loan to value ratio. Is there going to be a percentage that describes the loan size, right? How big is the loan? So if you're buying $1 million property and you're putting down 20%, your loan to value is going to be 80%. You're putting 20, how much loan are you getting? You're getting 80%. The loan amount might be $800,000 on $1 million property. Your LTV ratio is 80%. Okay, that's your term. Another one is that if you see MIP versus PMI, I'm not trying to rhyme or anything, but this is for your mortgage insurance. They mean the same, but one of them is for your FHA, which is your MIP, which is mortgage insurance premium, versus your conventional, which is your PMI, private mortgage insurance. Both of them mean the same thing. Okay, it does not insure your borrower. Rather, it's protecting your lender when you're not able to make any payments. MIP, PMI. All right, guys. Open house signs, guys. We got a few minutes left here. If you guys need them, please do order it. Miranda got them, MP got them. I believe another agent is on the line that wants to get it too. So please, if you are trying to get them, 3 of them for $200. You can pick it up from Anand at 101 location. We'll share that with you guys later on today too. Disclosures we went over, guys, and just make sure that you are on track to reach your goal for 2024, guys. If you haven't set a goal yet, look, today is January 24th. The first month is almost gone, right? We got 11 months left now. So we need to really see if we want to be under contract, we really need to focus on what we really have to do. Is to know how we're going to guide our clients, how we're going to show these properties, how we're going to use our system to do that. Okay. We are licensed. We recently got licensed a few days ago in Michigan for our mortgages. So New York, New Jersey, Indiana, Georgia, Florida, and Michigan. If you have any family members, clients that's looking for mortgages there, we can help out. But again, we're asking for this if you have those. Those clients there. But in New York, when your client is shopping around, if you bring them to our office here, we can really help them out, save some money, right? Because we're the brokers, we really have a lot of different options for them. So I hope you guys can guide them in here, okay? Okay, I have a few slides here. Team members, if you really are, need that helping hand and want to join a team, team leaders are Sheldon, Rupinder, and AP here. So you guys can reach out to them. And that will do it from my end, guys. Any questions, concerns, any way we can make these meetings better, any topics that you want me to go over next week, please let me know. Any feedback?
Hey, Lucky, is there a way I could meet you 101 like next week, probably Friday?
Yes, of course. And I want you to keep it very simple, guys. Anytime you guys are on there, just ljagent.com, right? Schedule a meeting with Lucky here or meeting with Jas. You just click on it and just schedule it. You don't have to ask me. This is my schedule. And, if you make a meeting, trust me, I'll be there. Okay?
Okay.
Yeah, that schedule is accurate. Okay? Anything else, guys? Please, I'm non-producing. I've been saying it every week. I don't do any deals now, right? We have plenty of clients, plenty of agents that I want to be the helping hand. Just use me for anything. If it's your first showings, first listing appointment, first offer, first anything, any questions on your mind, just ask away, right? We want you to be professional. We want you to know that we can help your clients out, even if you're brand new to this business, right? All right, guys. Any questions, concerns, any last moment?